Today I'm talking about Toronto real estate predictions for 2026. What's happening with prices, demand, interest rates, and what it all means for buyers and sellers across the city. Toronto's market can feel confusing, but this video is going to break it down clearly and practically for you, including which areas continue to perform well and where the best opportunities might be this year. My name is Robyn Muise with the Brenda Grant Team. If you're looking for tips, strategies, and real talk about the Toronto real estate market, you're in the right place. Make sure to like and subscribe, and if you're ready to take the next step, book a call with us using the link below. All right, so first let's talk about price outlook and reset. We'll start with prices. Most forecasts are calling for modest price growth nationally and in the GTA for 2026, which in practical terms means a fairly flat market and with some areas up a bit and others down a bit. This isn't a crash or a big spike. It's more of a reset and stabilization after the volatility of the last few years. Freehold homes, especially detached and semis, in established neighborhoods continue to perform strongly, and inventory in these areas is tight and lifestyle is a big draw. Think of family-friendly pockets like Leslieville, Riverdale on the east side, High Park and Romsey to the west, and school-focused areas such as Midtown, Leaside, and Lawrence Park. Condos are more of a mixed story. Downtown and transit-oriented condos still have some movement, but higher inventory and investors selling in some buildings keep conditions more of a buyer's market or balanced, with the potential for things to tighten up later in 2026 and as we head into 2027. If rates stay relatively low, more buyers will come off the sidelines. The larger units, especially 2 beds and 2 baths or plus den condos, are seeing stronger end user demand, while studios and many 1-bedroom units have much higher inventory and tend to sit longer on the market. The type of property and the specific micro market you're in will make a huge difference to the outcome. Okay, let's move into demand, inventory, and micro markets. So looking at demand across the city, 2026 is shaping up as a year where buyers are still pickier, but still very active when it comes to a home checking the right boxes. Some parts of the GTA have higher inventory and longer days on market, which gives buyers more choice and stronger negotiation power and room to include conditions. At the same time, there are clear micro markets inside Toronto where inventory is low and it's never really gone away, and homes still attract a very strong interest. Some examples of these, as I mentioned, include Leslieville, South Riverdale, where family homes and renovated semis close to transit and parks still draw multiple offers when priced well. Sales volumes are expected to improve gradually through 2026 as improved affordability and more stable rates draw buyers back into the market, but performance will be very neighborhood dependent, as I've mentioned. Interest rates remain a key driver of the market as well in 2026. The Bank of Canada's policy rate is currently in the low 2s after cuts through 2025, 4 cuts to be exact, and most expectations are that it will stay roughly in that range for a while with only limited movement. 5-year fixed mortgage rates, however, move differently. They're tied more to the bond market yields than the policy rate and are currently sitting at around 4% for the best rates, with forecasts suggesting they could dip a little lower in early 2026. They may stabilize or tick up slightly later in the year as bond yields adjust. Fixed rates are lower than their peak, but still higher than the ultra-low levels we saw in 2020 and 2021. This overall rate environment is helping affordability compared to the worst of the squeeze, and it is slowly bringing some buyers back into the market, especially first-time home buyers and move-up buyers who would press pause. And we saw a lot of that activity with our team in the fall. Even small moves in rates can significantly impact monthly payments and what you qualify for, so planning and pre-approval are more important than ever for you. Now let's talk about what buyers need to know. For buyers, 2026 is about being strategic, patient, and data-driven. Freehold homes in low inventory, high demand pockets, as I mentioned, like Leslieville, Riverdale, High Park, Romsey, and key Midtown school districts, still move quickly and can attract multiple offers when they're well presented and well priced. And these areas' success comes from being fully prepared. So having your financing lined up, clear must-haves, and the ability to move quickly when the right home hits the market. In the condo market, certain buildings and location offer more selection and negotiation room, especially where investor activity has created higher inventory. As the year progresses, if rates remain supportive and demand builds, some of that extra inventory may be absorbed, creating tighter conditions and less flexibility for buyers later in 2026 and as we head into 2027. Overall, focus on long-term livability, location, and value rather than trying to perfectly time the bottom. As long as you're in it for the long haul, you're going to be happy with the outcome. Moving on to what sellers need to know. For sellers, 2026 is not just listed at any price and it's going to sell kind of year. It's going to take strategic pricing and presentation in this market. Freehold sellers in desirable, walkable, low inventory, and family-oriented neighborhoods still do have an advantage as buyers continue to prioritize lifestyle, schools, and commute, although you do have to be prepared and positioned properly. If your home is in one of these low inventory pockets and it's staged and priced strategically, you can still achieve a strong result and in some cases, multiple offers. Condo sellers need to be realistic and hyper-local. In buildings with higher inventory, pricing slightly ahead of the market, strong marketing, and move-in ready condition are essential to the sale. Whereas in boutique or transit-oriented buildings with limited supply, there's more room to push pricing. Across the board, understanding your micro-market data, not just citywide headlines, is key to a successful sale. And my final thoughts? To summarize 2026 in Toronto, prices, they're going to stay generally flat to modestly higher overall, with freehold and established neighborhoods tending to outperform condos and some condo segments tightening later into the year and as we head into 2027. For demand, it's going to stay steady, likely, but selective, with big differences between neighborhoods, and some areas have higher inventory and more choice, while micro markets have that lower inventory and more demand. Interest rates, lower than the peak, with the Bank of Canada expected to hold roughly in the low 2s and prime around 4.5%, which keeps mortgage rates more manageable but still requires careful budgeting. And the market tone overall, it's going to be balanced, strategic, and very location-driven. This is a market where good preparation and local expertise matter more than catchy headlines. Even in what looks like a flat market on paper, your result can vary a lot depending on where you buy or sell and how you position your move. If you found this helpful, hit like and subscribe and comment below with your neighborhood or the area you're curious about. The 2026 market is very local, and it would be a pleasure to share what's happening specifically in your pocket. If you're ready to take the next step, book a call with us using the link below, and let's talk about your future plans now.